You're listening to AI Prism from Seoul Economic Daily.
Here's what retail investors are missing in today's market move. KOSPI hit 8,788, but 81% of stocks fell. The semiconductor ETFs many Koreans hold are no longer tracking Samsung and SK Hynix. They're now dominated by a components company. Korea's National Pension Service crossed 1,900 trillion won in assets on a 25% year-to-date return. When NPS rebalances, it moves markets. It's Tuesday, June 2nd. Let's look at what this means for retail investors in Korea. The KOSPI headline of 8,788, up 3.68%, looks strong. The internal picture is not. Only 183 of roughly 900 KOSPI stocks advanced. 732 fell. Traditional sectors were crushed. Retail down 5.38%, construction down 4.66%. Retail investors, called gemi, meaning individual ants, bought 385 billion won net. The real driver was institutional buying of 2.53 trillion won, mostly from fund managers who had to purchase underlying shares to hedge single-stock leveraged ETF inflows. Here's the mechanism. When retail money flows into a double-leveraged ETF on Samsung Electronics, fund managers must buy the actual shares to maintain the leverage ratio. Heavy retail inflow into these products creates institutional demand, concentrated in a handful of names, while the rest of the market drifts lower. Tuesday was exactly that. Now the ETF structure problem most retail investors haven't noticed. Seoul AI Semiconductor, Top 2 Plus, and Codex AI Semiconductor, Top 2 Plus, marketed as ways to buy Samsung Electronics and SK Hynix, now have Samsung Electro-Mechanics as their largest holding. Seoul, 27.3% in Samsung Electro-Mechanics. Codex, 39.7%. Samsung Electronics and SK Hynix together are below 45% in Codex. This happened because Samsung Electro-Mechanics surged 115% in late May, mechanically inflating its index weight. These products are actively sold to retail investors as concentrated Samsung-Hynix plays. Right now, they are not that. Check your ETF holdings before adding. On the NPS, Korea's National Pension Service, one of the world's largest pension funds, crossed 1,900 trillion won, approximately $1.37 trillion in total assets. Year-to-date return is reported at 25%. On Tuesday, NPS sold a net 25.7 billion won after briefly turning to buying last Friday. Monitoring NPS flow direction matters for retail. When NPS rebalances out of domestic equities due to allocation limits, it creates headwinds regardless of fundamentals. The macro risk. Bank of Korea Governor Shin Chang-hwan stated Tuesday that Korea's strong Q1 GDP growth of 3.6% year-on-year leaves few obstacles to using monetary policy to address inflation. A rate hike is being priced into the second half. 5-year fixed mortgages are already at 4.32 to 7.31%, with the ceiling potentially approaching 8%. For retail investors with margin accounts or mortgage exposure, this is the variable that matters most. Korea's securities-backed lending by top brokerages hit 15.4 trillion won, about $11 billion, in Q1 2026, up from 13.9 trillion won a year earlier. So what does this mean for retail investors? 3 practical points. 1. The KOSPI number is not your portfolio. Diversified Korean holders likely did not participate in Tuesday's gains. 2. Check your semiconductor ETF holdings today. The products may not match their marketing description. 3. A rate hike path combined with heavy margin debt is a risk combination that narrows the error margin on leveraged positions. What to watch? ETF index rebalancing dates. Next scheduled review will likely reduce Samsung Electro-Mechanics weighting. Bank of Korea rate decision. Likely Q3 2026 based on current governor guidance. NPS domestic equity allocation. If NPS hits its ceiling, forced selling is a structural headwind. That's today's AI Prism, retail investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a 1IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.